All right, guys, what's going on, everyone? Charles, what's going on? Um, no video today, but you should see my screen and hear me. Someone give me a shout out in the chat. Just to let me know you can see and hear everything okay. And my plan is, all right, thanks, Tim. My plan is to do another one of these on Friday. A lot to talk about today. Some of this is review, but I think it's good to go over kind of in depth here when we're all together. And if you guys have any questions, as usual, post them in the chat and I'll try to get to them, especially as we're going through this here. And any questions you have, even if they're unrelated to what we're talking about, go ahead and put them in the chat here. Let's start with silver and gold, since obviously that's in play today. Before we get into the specifics of silver and gold, let's do a quick parabolic review and talk a little about asymmetric bets. So when we have that parabolic setup, we've talked about this quite a bit, but I don't know if we've gone over in depth what we're actually looking at. When we're looking at these parabolic moves, what we want to see is a move that is essentially almost straight up. We don't want one of these stair stepping type moves. That doesn't mean you can't short something that's been in a nice trend, but usually this is more of a topping pattern. And the reason that becomes important, a lot of it is how you enter these and where you target these things. Now, what we're looking for here is something that has gotten extreme. And with the parabolic short, that is always kind of front and center, I think, of the word extreme. Hard to type right here with the mouse, but that's it right here. Extreme is what I'm thinking. So we want something that has gone straight up, feels like it's going nuts. There's insanity related, and we felt all that as gold and silver have been going up here. And we want to see a gap developing between, or a widening between price action and the key moving averages, whatever your key moving average you're watching. Obviously, the 90 EMA is going to be tied a little more closely because it's only the 9 days. But if you do the 20, I use the 50, you start to see that gap widening like this. And that's what we were seeing with silver and gold. That's when that's when you start watching for these things. You can also look at stochastics. Stochastics, I like to see above 80, and 90 is even better. Most of the good ones are going to hit 90, 95, even close to 100 here on stochastics, which is telling you that's an over bought measure here for price action. And what stochastics is measuring is rate of change over a given period of time. So that's essentially what we're looking at, these extreme kind of moves. And then we start looking for our entry. What I look for when you start to see this is when you put them on your watch list. And you can see I've got here a list that I keep. You can see overbought, oversold. Obviously, oversold is for the rubber bands, the ones that are really beaten down to potentially trade as reversals, and then overbought, obviously to short, like we have with silver and gold. Remember, the other thing is you are not predicting that the trend is over overall. I can think gold is here now. I have my short signal, and I can think maybe in a month or two or longer, whatever the time frame is, gold is going to be way up here. But we know things don't go in a straight line. There can be big drops on the way up, and we can profit for that. So that's the idea behind the parabolic short. Now, sometimes they just completely fizzle out, and that is the extent of the entire move. I don't think that's the case for gold and silver. That's the idea behind the setup. And then when you start to see volatility and volume increase at these extreme levels, when you have the widening of the gap, when you have stochastics at 80, 90, 95, and then you start to see gap ups and the widest ranges in the stock, and you start to see volume pick up, whether it's green or red, doesn't matter, just volume picking up. That's that indication that it's kind of the last push for the stock. That's when we really start looking for those reversal candles and entering on a potential reversal. So that's how we look at the parabolics. Now, that's the setup itself, and there are often fake outs. And we took a shot at the silver like here, and then we took gold, right? It happened pretty quick. I think there was only two shots. Sometimes you take two or three, four shots. And sometimes it can also be tough. One of the toughest things is when you've lost on a trade and it sets up again, re-entering that setup. And I've said this a million times to you guys, you know, you've heard me say this. If I get stopped out of something that's extended in a parabolic, I get more excited if it gets even higher because I know the setup is getting better. And oftentimes there is a fake out, and you have to keep an eye. You have to keep the idea of the asymmetric bet and being willing to take those small losses. So essentially what we're looking here with the asymmetric bet, which essentially what we're doing with the parabolic short setup is small losses. We're fine with those. You can take a lot of little losses. It's not going to hurt you that much. And then you want that to hit on that big win. And that's going to give you a net positive expectancy. Now, I went kind of extreme here with losing four times in a row and then getting a 6R on your win. But it illustrates the idea here, right? You lose 1R, 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 1R. More likely it's going to happen one or two times, but let's say it happens four times. You've lost 4R trying this four times, right? And then you hit on the fifth time and you get 6R. Your net result is plus 2R, right? Now, this is extreme. We don't want to just win 2R. Usually it's one or two losses and then you hit the big win. And then you're getting like 4 or 5R. But the point here was even with that 80% being wrong 80% of the time here, you net plus 2R here. So that's the idea behind asymmetric trading. Obviously, you want to do a little better than what I illustrated here. But this is the point. Look how bad you could be doing, and still you're coming out ahead. So you have to have that thought process, that mentality. You can't get frustrated. Market frustration is a good sign, and we saw that with gold and silver, right? We saw it all over the place on CNBC, people talking heads, wherever you message rooms, Reddit, Twitter, wherever you go, everyone talking about like this can't go up higher and fearing like they've missed the move. Then you start to see it on magazines. That's when you know that's probably the extent of the move. We saw it in our own chat room. People were talking about, oh, you know, this thing keeps going up higher and higher, or when there was a little loss on a short, a little bit of frustration. And that's a good sign. That's kind of the signal to you that the move is over. So when you have that, not necessarily you, but you feel that collective, like this thing can't believe this thing keeps going higher. That's that crowd psychology. And think about that when we're trading the technicals on what we see, but think about that crowd psychology as well. So again, we have the setup, the idea of the asymmetric bet. Now let's look at gold and silver. Very similar in their moves. So we can see here silver. This is exactly what we talked about, right? We had the move, which started off like a nice trend, right? It was just trending, trending, trending higher. Then here it started to get to that kind of irrational behavior. The crowd kind of move higher. And we see the gap between the 50-day moving average and price action. And notice here, volume started to really uptick when it was already extended. We can see stochastics here, we're above 90 here, getting very extended. Then look at the increase in volume, and then look at all the gaps here and the widening of the intraday candles. That was our signal in here, and then you can see how strong it dropped, right? And we were a little earlier, and some of you got in here. I was in a little earlier. I did do some options up here as well, which I don't post in the group. Sometimes I'll talk about it, but since it's not options trading, we don't mention it too much. But I did do some options up here as well. But you can see here the big decline now, and this is what normally happens now with these things, in that you get the initial move to a key support level. And notice here, silver went right up to the 50-day moving average. And it's amazing how many times that 50-day moving average, when it drops, will also correspond with a supply demand zone. And we see that right here with silver here. This was a kind of range that had formed over weeks, and price dropped right to that level, which again also corresponds with the 50-day moving average. Sapri is saying the volume cut out. Just uh, shoot me a message here that everyone's hearing me okay. Hello. Okay. Hope you guys didn't miss too much. But now move to the 50-day moving average, which corresponds with the supply, the supply zone here, supply and demand zone. Now we see the reflex bounce, and this is very common on these parabolic shorts. You get the move down to a support level. It's in the range here, just like kind of drawing here. Here was the little consolidation here, and then the 50-day moving average. You often get that bounce here. Now, one of two things can happen here, right? Either it gets right back on trend, or you get the failure and the next move down. And it's very hard to predict what's going to happen here. Now, I didn't take profits here. Part of the reason was because I wasn't getting that outsized gain yet that I want because of where I entered. But we have the reflex bounce here. Notice 9 EMA is curling down. And the question is going to be now, and we don't have the answer to it, but the question is going to be now, is this going to be a dead cat bounce and we start our second leg down, or is it going to get right back on trend? This thing is so extended that I think the odds are good that we get that secondary move down. And these bounces can be pretty powerful too. Notice today, this is a 10% bounce, but within the context of this, even 10% still doesn't capture a whole lot of this move down, right? And the exact same thing with gold, and obviously that's what I'm trading here. But same thing, came to this support level here, which was right around the low of Friday and open the gap range in here, bouncing right up to the 9 EMA here. And then we'll see. I think for me, where I would give up on the potential for secondary bounce is if we take out Friday's range here. So I'll be watching obviously that level very closely, but still a lot of potential for some back and forth here before it could potentially decline here. So that's the idea here behind the parabolic. I just wanted to review that because a lot of us are obviously in the gold and silver trades, or there is potential for now the secondary move. All right, so that's parabolics in the silver and gold trade. Stuff different industries. We've seen this many times. Things get insane, kind of parabolic. This is the way we look at it whenever that happens. All right, now let's move on to some earnings. It's interesting so far, earnings season hasn't been that explosive in either direction for gap ups and gap downs. So the list is smaller here for me than it normally would be. And you guys know I keep earnings lists every quarter here, and I've got a lot of my old lists in here as well. But this is the list so far. There are a few others I still need to add in here, but this is essentially the basis of the list. But I want to go over big tech some of big tech that has reported. I don't have Tesla in here and a couple others, but because they illustrate three of the things we're looking at during earnings season. Of course, there's earnings run up going into earnings, but I'm talking about after they report. The three things we essentially look at are the breakouts, the breakdowns, and the intraday reversals. And generally, this is off initial bad news. And let's start with that in Apple. You guys know from past earnings, this is one of my favorites when we get that intraday reversal and essentially reversing what the initial kind of feeling was about that earnings. And Apple has done this, and obviously we're in Apple. I think it's up about 10 points from our entry, maybe pulled back a little bit, but around 10 points from our entry. And notice here's Apple's price action on earnings day. And what had happened with Apple is it reported and had fantastic numbers, record revenue and earnings growth. There were some concerns in their guidance, so we won't get all into that, but there were some concerns with the guidance. And after hours, the stock, I think, was down. I can't remember exactly now, somewhere around 3, 4, or 5%. And then it opened down as well. We can see here, if we look at the chart here, here's where it was intraday, and here's where it closed. But when you get that down open or that down outside of market hours action at the initial reaction, and then by end of earnings day, you get that intraday reversal, that is often a very strong signal. And that's what we got here with Apple. Essentially here, it was down. There were concerns. But by the end of the day, that thing had totally reversed. And that is, again, a very strong signal. And look at what happened with Apple. This is what it did intraday. and right away, boom, all the way up to the 50-day moving average, and has now remounted that level, and looks like it's getting right back on trend now. So always be on the lookout for that, especially with stocks that have been swing momentum stocks that you've been watching that have good growth, have good revenues. They're really good stocks that have this kind of overreaction initially and reverse right away. That is, again, is a very strong signal, and we're seeing that playing out exactly with Apple right now. And kind of that same concept, but a little different way that it plays out, is the earnings breakdown. That again is strong stocks that we've been watching that gap down on earnings that tend to be overreaction. So we're looking at stocks that again are swing stocks that have been leading momentum stocks. They're leaders in their field. Generally, most of the stocks we watch have strong growth and revenue growth, and maybe expectations were really high and they just barely missed on earnings, and everyone gets scared. The stock gaps down, or sometimes it's the numbers are actually good, but the company says something in their guidance that is concerning, and then you get the gap down. And we saw that with Netflix and Microsoft. These two actually were a little concerning already going in, but I still think they're okay to use as examples. But we see with Netflix here that had the gap down, and then Microsoft here as well. Now that's continuing down. LVS was another one, and look at how LVS gapped down and has reversed right away after that gap down. Now was another one that this has continued down here after reversing initially. But so with these stocks, when they gap down and I identify them as a stock that I might see I like as a potential reversal, we're essentially looking for a number of setups here that could develop. Either an immediate reversal, I have it drawn out here, either an immediate reversal here, where within the first few days it pulls into the gap. That's what we see with LVS right now. We can see here immediately reversed on the third day, pulled into the gap, and that would be a trigger. I didn't take it, but the setup did trigger here. Then you have the gap continuation where it does gap down and continue down, but then at some point reverses. We're watching for that with Microsoft right now. Hasn't given the trigger for a reversal, but it's continuing down, right? And we'll watch for the potential reversal, kind of like here. See here where we have the reversal candle after it gapped down and continued down, then gave you the reversal candle right here. We'll be looking for some kind of reversal candle there. Those are the two main ones that often happen. Sometimes, much like the immediate reversal, that for the entry, it kind of consolidates for a while, doesn't continue down, doesn't immediately reverse, but takes a little time and then reverses it. Then, when we get back up to this range and essentially invalidate the breakdown by filling the gap and getting above that gap level, that's a very strong signal, and we like that. That's the strongest entry is when it does that. For this to happen, number 4 here, 1, 2, or 3 has to have happened, right? So a lot of times you'll have traded this, you take your profits here, and then watch for it to break this range for a potential entry. So we're looking at those gap downs. And then we've talked about these a lot, the breakouts, right? So you get the breakout. So we have, and Meta did that, obviously. You get the breakout, and then sometimes they continue higher and maybe consolidate. We look for the flat top breakout, or my favorite ones are the pullbacks. And generally, they're pulling back to the bottom of the range, the 9 EMA, or even all the way down to where they broke out from, filling the gap, but then showing strength at that level. And we're watching Meta right now here for that, right? Broke out, is pulling into the gap. We'll see if it can find support either at the 9 EMA or where it broke down from here. This one's a little tricky because the 200 is in here as well, which is not common. But we have potential breakout pullback here in Meta. So that's essentially what we're doing around earnings, is looking for these setups related to the breakouts, the breakdowns, or the intraday reversal on the day of earnings when they initially had a negative reaction and then reverse intraday, like Apple. All right. So, and again, if you guys have any questions, let me know here in the chat, or maybe a ticker you want to look at related to some of this stuff. Really quick, I'm not going to spend a lot of time on this, but we will do a more in-depth session on this. That's position trading. I told you guys with PLTR, I was willing, because PLTR has such strong revenue and earnings growth, that I was willing, you generally have a rule that you stick to your stops, and I'll loosen them from time to time. I've done that with a few of these that I'm willing to turn into position trades, but I already have a plan for that. You don't want to do it too much, but when you find a good candidate, again, in an industry you like, that's a leader in the field, that has strong revenue and earnings growth, sometimes I will turn them into position tradings. I did that with SLTLD a while back, and we had to hold this for a long time, but then it got back on trend, and you can see what it's done since. I'm doing that with I did that with energy, where I was willing to hold, and we can see where energy is right now. And then I did that with PLTR, and now it is remounting the 200-day, or it was earlier today remounting the 200-day on earnings, and a little below that now, but still up about 4%. So remember with the position trading, one, you don't want to do it too much. You have to, nail is another one, Rich, you're right. Um, and speaking of nail, I just saw this today from Rocket Mortgage, and actually the CEO is a good buddy of mine, Varun Krishna. But he mentioned today they don't have earnings until the 19th, but he mentioned that they're having the best mortgage loan volume in the last 4 years. So maybe that's going to be a good signal for housing in general. But all right, going back to what we were talking about here, which is the position trading, only for stocks with strong technicals overall, leaders in the field, and strong fundamentals. All right, point number 5 here, airlines and travel. Pay attention to jets. We talked about this a little bit, but we saw a pickup here in earnings related to cruise lines and airlines. And ever since then, this industry has started to move, this overall industry. Let's look at jets, the ETF. You can see here popping to, I don't know if that's all-time, not all-time highs, but highs for quite a while here. So very strong signal here. We had UAL, which didn't have the strongest earnings reaction, but has come back very strong. Same goes for Delta. And then Love is on our breakouts list. And you can see here how strong it has been. These aren't entries right now, but we'll watch for pullbacks. And remember, when we talked about Venezuela, we talked about the potential for travel there as well. And one of the airlines we were looking at was CPA. And you can see here, this has been showing extreme relative strength. So we definitely want to be paying attention to airlines that are a little extended right now. We'll be looking for pullbacks or consolidations. Same goes for the cruise lines. RCL broke out on earnings. We can see here. CCL, I don't think has earnings yet. Doesn't have it until March, but it is showing strength here as well. Looks like it's going to break this range right in here. And then NC, I forgot the ticker here for Norwegian. It's NCLH. NC, this one's also not quite as strong, but also looks good. Not as good. I would stick with CCL and RCL. So we have airlines, cruise, and then hotels as well. We haven't talked a lot about hotels, but if we look at Hilton here, Hilton had overall nice trend. And what we often see in these areas that are correlated with each other, like say travel, we've seen airlines and we've seen cruise ships start to move. Usually then we'll see the next batch of things start to move. So hotels will start to move, stuff that are kind of indirectly related to each other. So I wouldn't be surprised to see hotels move. So we still see continuation pattern in Hilton. Marriott, even stronger than Hilton here. And I would also look at travel booking. Here's Expedia, and kind of a volatile action today, but sitting around the 50-day moving average. But we often see this. Okay, airlines start to move, then cruise ships start to move, then hotels haven't really made the move yet, but oftentimes they'll start to move, and then travel booking. My mind's blanking on the other ones. EXPE is one of the go-tos. MMYT is another one that has been very weak. This is related to, I think, a China company. This one has been really weak, but maybe it comes back here, and I forgot the other one now. There's another one we watch. If you guys remember it, someone posted in here. Expedia and whatever the other one is. All right. And of course, we're paying attention to energy as well. Two different buckets of energy we're really paying attention to. That is oil and gas and nuclear. We know that nuclear related to AI. the Oklos, and you can see Oklo is pulled back and is at a key level. GEV has been on fire since earnings. We'll obviously be watching for a pullback here. VRT here near highs as well. And then, of course, the oil and gas ever since Venezuela has been strong as well. And you can always do ERX, which I'm already in. And you can see how strong ERX has been. All right, so that's what I wanted to talk about today. My plan is to do another one of these on Friday. I have a topic in mind, but if there's something you guys want to talk about, shoot me a message in the chat or just email me. Otherwise, not a lot of questions today. Sapri, position trading is essentially longer term swing trading. So not necessarily like investing long term, like holding 5, 6 years or 10 years, whatever. But a hold of time of maybe like 4 months to 2 years. All right, guys. Again, we'll do another one of these on Friday, and I will see you guys in the chat and in the report. Talk soon.